Welcome to my trading room. And we'll be moving over to model 4 where we discuss different things about Forex. This is just the theoretical part. Before then, please like, share, and comment on the videos as this will help me produce more videos as much as possible. And don't forget my private mentorship class is on. Is a one-on-one private session with me, and part of what you get from the class is a risk management bonus. And this is a class that for people that are aspiring to become professionals and pros in forex trading. The class is always open at any time for you. It's always open for you, and we have a specific number of people we admit at a time. We don't just admit a crowd because we want to give a private attention to each person. So it's not something that we admit everybody just at once. So be among the first set of people to join the next cohort. Okay, we move on. So we'll be talking about natural laws of trading, which are mostly rules that govern trading. So whatever kind of trade you involve in, trading you involve in, you will always need and you always follow these rules. These rules govern everything about forex. Then forms of trading are we have different kinds of traders. We have scalpers, we have swingers, we have position traders, and we have day traders. Those are the kinds of traders that happen. You could fall in any of this category. So we'll look briefly at what they do personally. Then we have types of charts. Charts are visual representation of market prices and how they move. So that is what chart is. So most charts are represented in line formats, most are represented in bar charts, most are represented in candlestick format. So whatever is the case, you always know about this. And not just that, not just that alone. The best candlestick formation is the best chart view is candlestick. So candlestick is the best kind of way to view the chart. So moving on. So what is the natural laws of trading? The first thing I have there is consistency. So you have to be consistent with your strategy. You have to be consistent with whatever you're doing, with the time frames, with your risk management skills, and all of that. So your consistency is very important. Now, you can always adjust your strategy or you change your strategy, but that should always be after you might have worked with it for some times and you discover that it's not giving you what it should be, then you can consider a change. Without that, it's always better that you maintain your strategy so far it's giving you the profit it desire. Once a strategy can give an edge in the market, once a strategy can give you an edge in the market, you're always good to go. You just need an edge. Except it doesn't give you an edge, that's when you should be considering switching things up to something better. So that takes us to our number 2 point. We are saying you must have an edge in the market. So if you're constantly losing, then you need to pause for a while and find the reason why you're losing. It's in these reasons that we will always make profit. So if you don't find the reason why, you may never be able to make profit. So these reasons are things that form part of your trading plan. You have to find the why. Why am I losing? Why am I constantly losing? Why am I failing? Why did this trade fail? So you can have an edge. So without an edge, then it means you're not trading. You're just dashing the money to the market. Always take care of your downside. There will always be drawdowns. There will always be red days. Your risk management is definitely very important. So if your risk management is in place, then your downside has no worries. So you have to be consistent in your risk management, because if you have a faulty risk management, then a lot of things will go wrong for you. A whole lot of things will go wrong for you. So beside that, another thing is that you need money to make money. Understand? That leads us to compound effect. You understand? You want to raise $100K, from a $1K, you have to compound your profit you're making every day. You can decide to always split your profit into 50% so that you don't go hungry. Make use of the 50%, save the 50%, and that's how what you could that is what you can decide to do, or you may decide to do. Understand? There are so many ways. So the secret about it is that you want to compound funds so that you can increase your lot sizes as the days go by, or as the time goes by. You increase your lot sizes, and you're also making more profits the more you increase your account balance. So there's no best trading strategy out there. No trading strategy works all the times, and trading is not a get rich quick scheme. So that's what you should know first. There's no best trading strategy. Nothing is perfect out there. That is why your psychology needs to be perfect. You need to be okay. You need to know when to stay out of the trade, and you need to know when you should be in the trade. If you don't know this thing, it's gonna always affect you. Now, you can you can be trading for you can be practicing how to trade, or you can be trading for 2 years, and all of a sudden in 2 months you make millions you never made in a lifetime. That is how trading is. That is why trading is a get rich slow scheme. You definitely get rich, but it's slowly, because you know something that you just jump from point one to point 10. Every step is important in trading. This is not a spiritual matter that needs a miracle. No, you must go through the process. Understand? So it's after the process that you start thinking of making huge profits. You first learn, then you earn. So learn as much as you can. If you miss learning, you need everything. So you should focus on learning first. And apart from focusing on learning, anytime you take a trade, always focus on being right. Focus on being right. When you focus on being right, you always get a trade right. Now, in forms of trading, we have a scalp trader, we have scalp trading, we have swing, we have day trading, we have position. Now, scalp trading, they mostly use minutes. Their trade doesn't last more than minutes. They take multiple short trades in few minutes, and they are out in the next minute. That's how a scalp trader works. So mostly that's with analysis. One of the disadvantages about scalp trade is that you can be making so much money, and you can be losing everything and even your account balance the next minute. That is the disadvantage of scalp trading. It requires high discipline as much as the other forms of trading do. So in day trading is the opposite of this. What they do is that they find a particular setup for the day and they run with it, and mostly they concentrate on a particular session. They keep bullet times, like that is what that is where they concentrate on the bullet times. So once they're able to go up with this, they make their money and they are off the market. So they are not there to stay on the screen 247. They just have a particular trading session where they find a particular setup, make their entries, and they are off. So mostly they take just 1 to 2 trades a day. 1 to 2, highest is three, at most three. And another thing is that in swing trading, they trade zone to zone, support to resistance, support to resistance. That's what mostly swing trading is all about. Swing trading is all about that. And their trade lasts for days. It could be 2 days, it could be 3 days, it could be more. But their trade takes days. So position trading is the longest of all. Position trading could last as long as months, could last as long as weeks. So depending on how the market choose to go like. Then what are the types of charts? We have line charts, we have the line charts, we have okay, this is the candlestick chart. So this is how candlesticks are represented, which is the best form of viewing chart. Very easy to read and do different things. That is one thing about candlesticks. So this is a candlestick chart. Um, this is a candlestick chart. This is a line chart, and this is a bar chart. Okay, let me go live. Let me share my screen so you all can see it. This is a bar chart. This is a bar chart. It's not visible enough, and this is the best view I can give now. And this is the candlestick chart, which is the best form of viewing prices and its movement. So this is what you mostly use. If you use anything other than this, I think you're on your own. This is the best way of viewing a chart. This is the best. So it tells you what price is doing at every given point. And so this is a line chart. A line chart is, as its name implied, line. You will just be seeing lines up and down, but this is not what we are going to be dealing with. So so this is all we can do for today's class. Now, going back to the natural laws of trading, don't forget that any mistakes you make, it's always important you write it down, and those mistakes are things that forms part of your trading plan. These are things that everybody does, so there are no special advice about this. Your mistakes are important for your growth, so if you're making no mistakes, it means you're not growing. So each time you make the mistakes in trading, you encounter a loss, you make a drawdown, you blew your account. It's always very vital that you go back and read and understand, try to analyze why you failed the chart. Probably you missed one or two things you didn't pay attention to. Write it down, take note of it. And those things form your criteria for entering a trade. Those things form your criteria for entering a trade. By the time you have done this consistently for 3, 4, 5 months, you become independent of yourself. Understand? You become independent of yourself. You begin to understand the market more. And one thing about consistency is that the more consistent you are, the more you begin to understand the market, the more. So if you see traders that backed off early in the journey, it means they were not consistent, because if they keep doing this thing consistently, they'll begin to understand more things, and the more they understand it, the more they begin to enjoy the journey of forex trading. One thing that have kept me in this trading business for a long time is that I've been so um I've been so adventuring. I've been so adventuring. So I always want to know the reason mistakes and the reason losses occur. So if you have this attitude of always analyzing and practicing and understanding why certain actions or events happen, it will become fun for you and you begin to last longer. So always know the why behind every event. Just find the why. This why should become your criteria for entries. Have a nice day. Stay safe.